Hey guys, good evening. It's Simon with Trade and Perform Coaching. Wanted to go over today's price action. It was a nice day for the bulls in ES today and in NQ, and it was a little bit of a tricky day. And wanted to kind of jump into that and review. And I wanted to play a little gameplay. Play your perfect day. And this is from Denise Schull, who said, you know, when you go through, she wrote the book. Market Mind Games. And one of the things she suggested is, look, whether you've had a good day or a bad day, always go back through your day and play it out perfectly, right? So let's kind of set up a couple of things. Before we get started, let's go over the disclaimer real quick. I'm going to flash this up. Basically, this says that this is for educational purposes only. This is not a recommendation to buy or sell any particular financial instrument, equity future, option, or currency contract. Trading futures has large potential rewards, but also large potential risks. Importantly, past performance is not indicative of future performance, and that's not only for myself. That's anyone, anywhere in the market, right? And I do recommend that you consult a registered financial advisor and make sure you have a risk trading plan before ever trading anything, so you know exactly what you're doing. So let's jump into it, okay, and see what we can come up with here, guys. Let's get rid of this legal mumbo jumbo. So first of all, coming into the day, we have a checklist, or at least I do when I come into the day. My checklist looks something like this, and I at least go over it. Well, I didn't mean to do that. I at least go over it in a mental fashion. Let's see if it's this one or this one. There we go. Here's the pre-market checklist right here, right? And so we go through this list before the market opens, which is what is the prior day's first hour range, which was approximately 10 points, prior first 10 minutes range, what I'm looking for, and this actually belonged up here, but that's fine, no big deal. Is it a Fed day, non-farm payroll? That's a check off, right? Is it any kind of special day? So remember, Europe was closed overnight. That usually makes for slow, not two-way trading, right? So we kind of had a heads up at that. Is the market trading? Is the market trending out of London, right? And then the next question is: are we opening above, below, or inside prior day's range? That's important, right? Because if you're not trading below, you can't be bearish unless you're below prior day's low from a day-to-day standpoint, right? And you certainly can't be overly bullish, meaning it's not going to break out if we're not above the prior day's high, right? Do we have a increase in the prior overnight's range, and then the overnight range in points? So what it turned out was overnight, Asia and Europe, we just had a completely flat overnight session, right? And then what we got right about 7 a.m. was a break to the upside. You can see that we broke off this base right here. And we were looking pretty strong coming into the open. By the time we got into the open, we'd already advanced from 22.24 to up towards 23.30. So why is this important? Well, first of all, on a 24-hour market, we knew that in order to get bearish, we had to get below our swing lows, both from Friday afternoon and from the Globex session, right? And we had to come backside and backside test what was resistance through a very slow European and Asian session, right? And you'll notice out of the gate, just looking at this 15-minute chart, right, here's where we open up. And when we make our backside test, we don't even attempt to get back into this 26, 28 area, which is our first key that buyers are in control. So now when we combine this idea, right, with buyers are in control, and then we look at the actual chart, the actual trade plan, right, we can see out of the gate that we opened in positive territory, and that within that positive territory, right, when we come back in, there's another checklist, right, and that's for entering a checklist that you don't use. You don't go through the checklist prior to entering the trade. Hopefully you're maintaining that checklist as we go through the day, right? And let me see if I can't get this. There's a pre-market checklist. Let's get the post-open checklist going. Okay. And here's some of the questions that are on the post-open checklist, which is the angle within the first hour, is it greater than 45 degrees or up? That indicates potential trend and momentum in the market, right? has a bar traded in a contra position to the trend and closed above or below the prior 5-minute bar? Well, let's look. We got that, but we only got it ever so briefly. And what offset that? When we did trade contra, right, first of all, two things. It set a swing high, right, and we failed to fill the gap or get half gap. We actually just came back to half gap here, and we failed to fill gaps. So we know from a lot of history of trading gap ups that when you don't fill gap, what's going on? Buyers are in overall control. Now, we've also been noting that the last couple of days, and I noted pre-market, that we're Globex low. So look what I'm doing. What I'm doing is I'm setting up a level of priorities so that I can read the market to make a decision. Now, understand the most important thing before I get carried off on a tirade here. The most important thing when you are trading is to get context for the day. We as traders, we spend so much effort trying to get the trade, right? We're trying to get a trade or just to pull money out of the market that we don't pause to look and go, well, where is my trade and what am I looking for to what am I looking for to see, right? So we'd already discounted Globex high and low, and the reason we discounted Globex high and low before the open, even though it rejected off, was that very little volume was done in the Globex session. And remember, volume is the key underlier to everything that the market does. If there's no volume in a location, there's no reason for the market to defend that area. That's very, very important to know no matter what you're trading. If there's no volume in an area, there's usually very little reason for someone to come back and defend that location. That's the most important thing you can know about volume, right? So our location, the white zone, was this 2334 to 2336. So notice we did nothing at Globex high, but we got some good information. We saw that they were able to reject down. We saw that we were able to fill the gap. And then as soon as we swing back above here, we know buyers are in control. And importantly, we now have a swing low location for the day. Why is that important? Because when you're trading, right, what we're hoping to see is in a series of ups, right, we want to see that last swing low get broken for a push back to the downside. That sets us up, right? So when you look at this chart in a very simple fashion, right, the first thing that you'll notice for the day as we're going through is that we can't get back to the last swing low. All the way through here, we can't get back to the last swing low. And that becomes very, very necessary in order to go, hey, we're going to roll lower. Let me give you an example of that. Here's the last, as we're going through on if we go back to Friday's down day. Let me stop this for a second. Right, so a great comparison and contrast so you can know exactly what we're looking for. First of all, we open up the day, and we open up the day below the day's prior low and essentially the swing low, right? The important thing about the swing low is how much of a push you got off of it, right? Well, we open up below. That immediately tells us that overnight, buyers were unable to defend that location. But that's all right. When we open back up in the S&P 500, a whole new day begins. But two things become important. First of all, we then trap back in above prior day's low. That's bullish, right? We then have a swing low, and then we finally get a rotation down here that creates a new swing low, right? So notice we don't turn bearish unless we close underneath this area. Now that doesn't mean that you can't try to short out of a particular area, particularly after a stretch in ES. But we know for a fact if we never get below that last stretch, if this market had continued to make higher lows, so you'll notice higher low, and then this bar definitively breaks that last low, and you can see it just takes that little tip, right? Two things were happening. We were unable to close above the swing high, right? And we were unable to maintain a close above the last swing low, and then importantly, this was the last major swing low in this area before we pushed up. The next thing that it left was this swing low all the way down at 36.34. And you can see how the market, when you look at this, you can see how the market carefully, we create this swing low, we create this swing low. This swing low gets defended right here, right? When this swing low, after it's defended, the first break, right? Second break, we're now broken. Guess where it gets defended next? This swing low right here, if you draw a line right across, you can see They attempted to defend that swing low. And then the other interesting thing that you can see is that once that swing low gets broken, it becomes resistance, right? And you'll see over here to the left, right, as we approach this swing low, right, it got broken, it became resistance, although we never got a large rotation down. Now, what we really did in the room, this is very, very important, okay? So first time into this location, what I want to do is I want to increase and decrease the size of my trades based on the odds that I think the trade will work to the downside. So I know that the white zone is a key location. I expect rejection out of the white zone. We got rejection out of that exact same location, that 36.34, right? We got rejection out of that location late Friday afternoon for a rotation all the way down to 23.26 and then overnight down to 23.22. The first clue that there was a problem here, right, was that when we came in, first of all, look at this rip. All of a sudden, after we come in and we fail to get half gap, buyers take control. No one bar can close below the prior 5-minute bar. First problem, right? So even if you're short in here, right, and the measure for the short was half size, normal stop, right? So that put that put your stop 2 to 3 points behind the zone. But what we're looking to do is tighten that down, right? If it was full size, we want to go from a 4 or 5 point stop to preferably a 2 or 3 point stop or less if we can get that done. So what we want to do is see some form of rejection, and we want to see the market's ability to trade below the prior 5-minute bar. Well, you get that here, right? So what's the next measure of whether the buyers or sellers are in control? Well, first of all, this white zone is usually pretty powerful, and what happens is we come in, what will normally happen is even in a straight up market, it'll come into that white zone and reject down for 2 points. So the first clue that there was a problem here was that we failed to be able to get that area to reject down below 2 points, and we failed to be able to get below Globex low, which I didn't think was as important. But getting below this white zone, why? Because buyers are in control above, sellers below. So this was the first clue there might be a problem. This was the next clue there might have been a problem. So what I would have liked to have done in retrospect, that first trade I took, I placed in the right location, and what I did was I made, I don't want to call it a mistake, I wish I would have made better judgment. I covered half my trade right here when we got to 33.50. I think the low was 33 and a quarter, 33.50 is where I covered it, but I only covered half the trade. Here's where I made my trading mistake. When we came back up, I figured we would try for a double top, right? I added the position back and was forced to cover for a loss when we closed behind. Why? Why did I cover for a small loss here? First of all, remember, this was a half-size trade to begin with. I took a point in profit. My original entry was 34.50. That moved me back to 35.50, right? I then moved my entry, my second entry was 36.50, right at the back of attempting this double top, right? And I left a few points stop, and I actually survived this and had an opportunity to come back in and cover this flat. That was a trading error on my part when I look at it. And the reason why is I should have figured out we just busted the last swing high. Now, really, really important to my trading, right? If I was going to have done this perfectly, once we busted here, I would have covered the trade out flat here. I would have been small, profitable for the day, right? And really, at that point, I would have really had a pretty good read, right? I took my trade on what was a 10-point stretch up from prior days, from swing low, the 24, right? It would have been 12 up from the overnight low, and it was a white zone. It was a key location that I expected rejection from, right? It's not all that unusual to see rotation behind, but when it's strong, right, it'll tend not to reject here. So the first clue or the first area where I could have done better would have been A, cover the entire, the thing that I did was smart was because of the strength, I reduced the trade size, right? The thing that I could have improved on would have been to cover the trade when I moved into this location completely and gotten out flat, right? And then not added when we came back up for the double top, because had we been weak, we would have busted below what I would have preferred to seen and have seen in the past, right? When we get this pattern is a push down, right? And then a rotation back up one more time to that white zone to reject and then push lower. So that's how that trade would have been done better. The balance of the day, when you look through here, right, what's happened now? We've gotten behind the white zone, okay? And remember, none of this is very difficult when you look at it at its face value, right? None of this is very difficult. We came into the white zone. The white zone did its job. The stop is normally, depending on your level of aggressiveness, 2 to 3 points behind the zone. We came in, first touch of the zone. We spent 5, 10, 15, 20, 25 minutes. You want to have your stop at least 1 tick or to 1 point behind here maximum, right? And you generally want these zones to work in less than 25 minutes. They don't always work less than 25 minutes, but the zone has done its job when it has parked the product ES in one location, right? So once we've parked in this location, right, you had the opportunity to take this trade off for flat to a small profit, right? If you chose to go beyond that, there's nothing wrong with that, but just realize you chose to go beyond the normal time frame it takes for the market to work. You were in a market where we had essentially an open drive higher that actually started all the way back at 6 a.m., failed to fill half gap, right? And what was the thinking here? Well, I can tell you my thinking. My thinking was, hey, we were going to hold that 36.34. We had a poor low that is still sitting there all the way back at 26.23 area. We had a poor low, and I was thinking, hey, we're going to get a trip back to the low of the day. That's important, right? Because it colors your trade. You don't want to take a trade out for 1 point when you think you have 5 or 6 or 7 or 8 points available. But what I did was, instead of moving my entry from 34.50 to 35.50 and just moving my stop to break even, I overpressed. It was a mental error on my own part, right? And then once I stopped this trade out, so I ended up with a net 2-point loss on a normal size trade because it was a half size. It would have been 4 points otherwise. So it's 2 points, right? And then I was clear in the room, right? Hey guys, we're above the white zone. Price action is no longer supportive of counter rotations down. When you look at a blank sheet, right? And this is really, really important. And I'm specifically talking to guys that are in the room, right? When you look at a market that's operating two ways, okay, look at the price action on Friday, right? This was our key location on Friday, right? But look where all the easy money, the easiest money came from, right? Rotations down. We got longs from this location. We got longs from this location. We even got a long from, I believe, this location right here. It was back on Friday, so it was a couple of days ago, so forgive me. But those were the key locations that we were taking trades from. And then this 26, right, it hit at the end of the day, so unable to take it, and you couldn't have gotten filled. It went right to the tick. But all these locations, these were all in key areas. And notice, look at, even though we're rolling down, the market's snapping. See how the market's snapping back 2 to 5 points each time here, right? Why is that snapback important? That snapback's important because it's giving you the ability to pull risk off the table. Once you get into the trade, you're able to relatively easily grab that 2 to 3 points and move on with your day. So now look at the difference. We essentially end up with a delayed open drive higher from here to here. Now look at the price action. Counter rotation. The biggest counter rotation took place right here and right here, right? What's the size of that rotation? We moved from 38 to 34 if you nail it perfectly, right? Which we didn't because we got caught in an open drive higher. And then again, it rotated down from 39 to 36. Now it's 3 points. If you're trying to get 2 points, you're going to need to capture over 70% of that rotation. It makes it really hard. So we did the exact right thing. So today's the lesson in today, right? We identified that the market was strong off the open, right? We realized that we were going to trade against the market to reduce trade size. Check number 2. The only thing that we could have possibly done better would have been to look at this and go from the swing low to the swing high, right? And have recognized that we came right in. We actually just missed. You would have had to front run it, but we came right into the 50 retrace from the swing low to the swing high, right? And it's really hard when you've had day after day. If you caught this day, this was great. but it's really hard when you've caught day after day of hard swings down, right? At least in my eyes, to get uber aggressive right off the open, right? When you have a gap up. If you'll notice when we went through most of these days, if you look at the last several days, right, there was only one gap up that really worked, right? If you bought this gap up, you got smoked. If you bought this gap up, it worked, going back to the 10th, right? This gap up, if you bought it, you got smoked. This gap up, you got pushed down to the downside, right? This gap down worked, and I was certainly willing to buy a gap into that 1820 area. We didn't get that opportunity, right? And then also you'll notice another key element. Look at all these days where we're having two-sided price action all the way through here. Beautiful retraces, multiple opportunities and swings in both directions, right? So that went away today. So if anyone ever tells you, hey, you only make money when you're trading, that is incorrect, right? What you're looking for, very importantly, what you're looking for are those markets that are providing you with the best opportunity to make money. This market was a tight, right, essentially trending up without much of a trend, and then I tweeted out, if you look in StockTwits, I said, look, they're just waiting to kill the stops behind 2340. You know, they're all stacked up there, right? And if you go and look at what we finally did, right, from a trade plan point of view, buyers were in control. We were above the white zone. There's little to no counter rotation. We know stops are catching up, and we know that this is a revisit, right? This 42 to 45 area, right? This whole thing. This is a revisit of the scene of the crime from which we broke down on Friday, right? And then you can see that when we got there, that this area held, right? 5, 10, 15, 20, 25, 30. That zone was placed perfectly. The market paused in what was an uptrending market, and then they finally squeezed them and pushed just above Friday's high before they squeezed and exhausted them, right? So if you're trying to trade, right, and you're trying to trade ES, what we all want are markets that look like this, right, where they trade both sides, and what we're trying to avoid is markets that trade like this. The most important thing that you can learn from today, that is, if the entire 5-minute bar, right, this whole bar that you're trading, if the largest bar is from 37 to 39, it's 2 points, right, and you're trying to capture 2 points on your trade, right, and there's no extensions down, there's no large rotations, it's going to be really hard to make money. That's reading price action. And there's no indicator, there's no stochastic, there's no MACD. None of those will tell you that's what's going on. You just simply have to look with your eyes and go, hey, all the way through here, we're making higher lows, higher highs. We're trending up, right? Again, to go out of the London example, we were trending up out of London. We failed once we gapped up. We failed to get to the half gap, the gap fill. We had great trade location, right? There's just one mental error, and that mental error should have been that when we failed to push significantly below the white zone, buyers gained control. They came back and backside tested this white zone once we got some negative space, which for those of you in my room, you know that I have a very big deal about negative space. We created negative space between the zone and the high, backside tested. The backside test found responsive buyers, and you'll also notice the NYSE tick never got significantly negative. This is the NYSE tick hitting negative 1,000, regularly hitting negative 800 on Friday afternoon. We're hitting 400, 500, 600 and popping off, right? So anyways, my name is Simon. I'm a Trade and Perform Coaching. If you'd like to find a way to become a better trader, right, to go from being inconsistent to being consistent, please feel free to join us in our room. Anyone is welcome to have a 5-day trial. Email me at tradeandperform@gmail.com. I hope this education has helped you become a better trader. And remember, if you don't know what you're doing, slow down, cut your trade size, go to paper trading until you can get consistent, right? And make the process more important and the checklist more important than taking the trade itself. Anyways, hope everyone has a great night. I will see you all in the morning.